Good evening, everyone.
Hello.
Hello. Is everyone all right?
Yeah.
Just waiting for a few more of you.
Well, this has just started, so I'll just listen to it. This has just started.
Right, everyone can. In fact, to tell you what, I'm going to mute you all, and then I can get started.
Oh, yeah.
Cool. So, what we're going to be going through tonight is a bit more of an advanced topic. And we're basically going to be talking about learning the different currencies and sort of getting in sync with how certain currencies move, whether they're slow, whether they're quick, whether they react better to trend lines or support zones, or how they act around the 200 EMA, because all of these things are kind of like the final building blocks to your analysis and taking trades. And obviously all of this will come over time. You know, the more you're taking trades, the more you're journaling your trades and noting down, you know, the reasons for taking them, what went well, what didn't go so well. You're soon going to find out what currencies have the most success with certain things. So tonight we're going to be running through 200 moving average and how certain currencies react around it. We're going to be talking about trend lines and how, again, certain currencies react to trend lines. And last but not least, a little bit about support and resistance and break and retests. And again, how different currencies react differently to these things. And a lot of you have probably already realized this yourself, and you've noticed that some currencies move a lot quicker than others, whereas others are pretty snail-paced all day long. Some currencies bounce perfectly off the 200 moving average, whereas others kind of move up into it, move through it, and then kind of come down a little bit later. So these are all things that really do matter, and they help a lot when you come to take a trade. And the reason I say that is because, let's say you're taking a trade based off a trend line, for example, and prices come up into this trend line. And from your previous experience on that specific currency pair, you've realized that actually price doesn't initially react straight away to the trend line. Firstly, what will happen is price breaks through this trend line and then it makes its way back down. So knowing all these things helps you perfect your entries when taking trades. Now, obviously, there's no such thing as a perfect entry, but obviously what we want to try and do is get as close to that perfect entry as possible. So what I'm going to do, I'm going to share my screen now. I've prepped a few charts and we can whiz through some examples. So we'll start with the 200 EMA. We'll start with USD CHF. I think you should all be able to see my screen. I've got you all on mute, so so whether you can or you can't, I'm not going to know, but I think you should be able to.
Yeah, we can see it.
Cool. Right, so this is USD CHF. And what we're looking at is the 200 moving average. So what we can see just by looking at the yellow lines, the 200 EMA, is that generally speaking on USD CHF, there isn't really any clean touches. Price is pretty much breaking through, pushing back through the other way, pushing back through again. Here it's very choppy, prices up, down, up, down, up, down. And this is pretty much true for most of the price action for USD CHF. There's no clean touches, there's no clean bounces or anything like that. So generally speaking, when it comes to trading USD CHF, I'm not going to be too interested in taking a trade based on the moving average, whereas, you know, on other currency pairs I might be. So automatically, you know, having this in mind, if you are looking at a trade and it's revolving around the 200 moving average on this specific currency pair, you'll be able to refer back to your notes and have a look to see, okay, actually USD CHF doesn't really react to it the same as other currency pairs does. So then you'd either skip that trade or you'd monitor it to see how it plays out, but you wouldn't be, you know, completely focused on taking a trade based off the 200 EMA. If we have a look at the currency pair NZD CAD, we can see straight away, firstly, ignore all of these trend lines and whatever. This is going to be a later example. But if we have a look at the 200 EMA, we can see that more often than not, price is reacting perfectly to this 200 moving average. Pretty much, I mean, as far back as we can go, every single time we're seeing reactions to the 200 EMA. And this is pretty much true for most NZD pairs. So if you've got a notepad, note this down, it'll be handy to know, or, you know, you'll find this out yourself from journaling your trades or, you know, back testing and practicing. But more often than not, every time price is coming up into the 200 moving average, we're seeing rejections and price is following the trend. So obviously we can see we're in a downtrend right now. The 200 EMA is above price and it's acting as the ceiling every single time. Now, if we want to be a little bit more technical and go into it a little bit deeper, what you can notice is they're not pinpoint touches. Almost every single time we're coming up into the 200 EMA, price is breaking through first and then coming back down. So every time I take a trade on NZD CAD, so obviously there was the trade this morning, which eventually hit take profit, we weren't interested in taking the trade as it first met the 200 EMA, because the last 1, 2, 3, 4, 5 times, price is breaking through first. So if we have a look closely, we can see, yes, there is initial reaction. Price comes up to it, touches it, pops down a tiny bit, and then breaks through. So based on this experience and what we can see historically, we weren't interested in taking it straight away. We wanted to see it push through first and then catch it when it was back on the way down, back underneath the 200 EMA. So these are just little things that are good to sort of bear in mind when entering your trade, because, you know, there's no point entering a sell position bang on the 200 EMA if the previous 7 times price has crept through. You want to try and get the best entry possible, and obviously you want to steer away from being in a loss, you know, or draw down as long as possible. So trying to find that sweet spot of, okay, we've got the drawdown out of the way, so price would have been in a bit of a loss, it's coming back down, now it should head in the right direction, which eventually did. So that's NZD CAD, and it works very similar with most of the NZD pairs. Some are more pinpoint than others, but for this example on NZD CAD, it prefers to break through first before coming back down. Next, we're going to have a little look at AUD-JPY. And AUD-JPY is similar-ish to NZD CAD. However, they're more pinpoint and they're more precise touches. So we'll ignore what we can see right here. But generally speaking, price touches the moving average pinpoint or thereabouts pinpoint and heads in the right direction. Okay, so if we have a look at those 3 examples, we can see pretty much price comes up, touches it, reverses, comes up, touches it, reverses, again here and again down here. And if we go back in the past, we can see there's so many occasions where price is coming in to the 200 EMA, which we can see across here, touch, 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 all the way up, following the trend. And these are pretty much precise pinpoint touches, and price heads in the, you know, the opposite direction. So with AUD-JPY in particular, you can bank on when price comes up to the 200 moving average, there will be a strong initial reaction. And if it isn't instant, there might be the tiniest bit of movement through and then price shoots down. This is also the same with most other JPY pairs. Again, we're not going to go through every single pairing and talk through every single sort of personality trait of these currency pairs, but we'll go through quite a lot of them. And obviously, if you're noting these down, you can then have a little look on TradingView afterwards when you're doing your practice and note these things down yourself. So you're almost create like a personality sheet of each currency. You know, Euro USD, is it slow? Is it quick? How does it react to trend lines? How does it react to the moving average? How does it react to support zones? So you've got this profile of each currency pair. And then when you come to take your trades, what you can do is flick to page 3 where you know your AUD CAD is, have a little look at it, compare it to the analysis you've marked up. And let's say it's a trend line, you'll obviously go to the trend line bit and see, oh, actually, it likes trend lines. It reacts nicely to trend lines, so that's good. And sort of it's there as a kind of little tick box exercise, you know, okay, perfect, that falls in line with my analysis, that agrees with my analysis, so it should be a good trade. So that's the kind of thing you want to be doing after these Zoom calls when you practice. And again, that's where journaling will come in handy, because again, you're building up this kind of profile of what trades you have success with, why you have success with those trades. Is it because of a certain analysis technique you've used? Is it the time of day? Is it, you know, a certain currency, whatever it is? So again, journaling is going to come in handy for that. If we move on to GBP USD, this again likes 200 EMAs. I mean, generally speaking, most currency pairs do. But what we can see here is we don't get as many touches. Price kind of falls short of the 200 EMA. Again, ignore this trend line. This is coming in the trend line examples later. But we can see that price doesn't really get close to the 200 EMA before it reverses. So again, here, coming up to around the 200 EMA, reversing beforehand. But what we do tend to see with, let me move that out of the way, with GBP USD in particular, and it's the same with quite a few of the GBP pairs, is that when price breaks through the 200 moving average, usually on the next touch of the moving average, so the retest of the moving average, there's usually a reaction and price bounces higher. So we can see here, price has completely crashed through the 200 EMA. Now it's the opposite side of the 200 EMA. And on the next drive down into it, we can see a pinpoint reaction, price drives higher, okay? If we go back in time to the last break of the 200 EMA, which was here, again, price completely crashes through the 200 EMA. And then on the next pullback from the other side to the 200 EMA, there's a pinpoint reaction and price goes the opposite way. And I think there was another example somewhere up here, or maybe I'm just making that up. Maybe I was making it up. Anyway, you get the gist of what I was saying. So on the breaks of the 200 EMA, on the next touch from the opposite side, we generally see a reaction, okay? Now we can see one here. So prices broke through, touched it, bounced higher, okay? Broke through, touched it, bounced higher. Same again here. Price crashes through the 200 EMA. On the next touch of the EMA from the opposite side, it bounces higher. So GBP USD in particular likes break and retests. We're about to get on to break and retest of the trend line, which we can see here as well, but I won't spoil that for you. And again, it's the same with most GBP pairs. So you can note down that GBP pairs likes to break through the moving averages, and then it's the next touch after breaking through that it tends to go the opposite way and bounce back. So that's the 200 EMA examples over. Now we're going to have a little look at some trend lines and see how different currencies, again, react to the trend lines as opposed to the EMAs. And back to the NZD CAD example. So NZD pairs in general, I love trading from trend lines or channels when it comes to the NZD pairs, and NZD CAD in particular. And obviously today's trade was a good example of combining, 200 EMA, trend line, and a level of resistance as well. So as we can see here, pretty much most of the price action for the last almost month has stuck pinpoint perfectly to this trend line. Okay, linking up the highs precisely, we can see that we've had multiple touches around here. So 1, 2, 3, 4, 5, 6, 7. You get the picture. Price loves the trend lines. Now, it doesn't matter if it's a longer term one, like we can see obviously here, or a shorter term one like we can see here. As long as there is a trend and you can draw obviously one high to the next high and extend it into the future, usually you'll see some form of reactions. Again, from here, okay, this short-term ascending trend line, from the low to the next most significant low, then on the third touch of the trend line, we have a reaction, okay? We can even draw one like this, which featured in the trade today, from high to high, like that, okay? So it doesn't matter whether they're longer term trend lines, shorter term trend lines, NZD pairs love trend lines and they react pretty perfectly to them. Now, if we have a little look at GBP USD again, going back to this example, GBP USD and GBP pairs in general, like trend lines. I mean, to be fair, most currencies will react to trend lines within reason. Some currencies will have far more touches of the trend lines. For example, NZD CAD, we saw, 7, 8, 9 touches before it broke. Whereas on GBP USD and quite a lot of other currency pairs, you generally see 3 to 4 solid touches before price breaks and goes the opposite way. Now, with GBP pairs in particular and GBP USD in particular, what we tend to see is, again, similar to the EMA example, after a trend line is broken, whether it's the 4th or 5th touch, on the next touch of the trend line from the opposite side, we tend to see a strong reaction and price bounces up higher. Okay, so I'll get rid of the 200 EMA just to show you this example a little bit better. There we go. So we can see here, price is broken through the trend line, and on the next touch of the trend line from the opposite side, it then bounces back higher. Okay, so GBP USD loves a break and a retest. Similar with GBP JPY, again, like I mentioned, it's the same for most GBP pairs. We can see here, high to the next high. So we've had 3 decent touches of this trend line and price is reversed. And then once price finally breaks out, we start seeing all these hourly candles above the trend line. The next touch into the trend line from the opposite side, price rockets and goes the other way. So GBP pairs like break and retests of these trend lines. And it's also a good thing to bear in mind because, let's say you got a trend line marked up for a GBP pair and it's the 4th or 5th touch. You'll then be mindful of, say, selling from this trend line because actually it's on the 4th or 5th touch that it usually breaks through. And when it does break through, it will come back down from the opposite side and then go the other way. So just these little things can sometimes make all the difference and either steer you away from trades or make you view things from a different kind of viewpoint. So instead of looking to sell on the 5th touch of this trend line on GBP JPY, you might actually be waiting for it to break, come back down from the other side before taking a trade in the opposite direction. So these things are really, really helpful to know. And again, they will come with experience, just like anything, and your journaling is going to help expedite that process. AUD NZD, final example of the trend lines. What we can see is that usually we see 3 strong touches and it's the 4th touch that breaks. Again, this is common with quite a lot of the currency pairs. It's usually the 3rd touch you find is the strongest, the 3rd or 4th, and then on the 4th or 5th, it will usually break. But AUD NZD, after 3 solid touches, so we'll count this as 1, considering that happened within a few hours space. So the 1st touch, 2nd touch a few days later, 3rd touch, and then on the 4th touch, we got a tiny little reaction and then price broke through. This is obviously the same with the GBP pairs that I've just showed you. So AUD pairs, when it comes to trend lines, you don't really want to be taking the 4th touch of a trend line. Anything, say, up to, say, 3 touches. So once you've had your 1st and your 2nd, you've got the beginning of your trend line. You'd extend it into the future. The 3rd touch is usually that golden touch. The same with most currency pairs. It's the 3rd touch that usually hits the nicest. And then any time past the 3rd touch, say 4th, 5th, 6th, you're then getting into that unknown territory of, okay, well, price is probably going to break through this now. But when it comes to NZD pairs, which we covered earlier, it's not uncommon to see 6, 7, 8, 9 touches of a trend line. So again, something to bear in mind. And finally, what we're going to look at now is break and retest of support zones. So when it comes to support and resistance, these are the only analysis kind of techniques that stay true no matter what currency pair you're on, no matter what time frame you're on. They will always hold weight. Okay, there's not usually a currency pair that tends to break through these more or less. They usually are pretty true to what they are. Okay, they're a floor, they're a ceiling, and it stays true no matter what currency pair you're on. However, what we can do is look at the break and retests of these currencies and see which ones tend to break and retest quicker, which ones tend to break and retest stronger, and over what kind of time frame. So as you all know by now, a level of resistance, no matter how short term or long term it is, once it's broken, usually it will then become a strong level of support, which is what we can see here. If I zoom out, we can see the exact same thing, but just from a much larger time frame. I'm not going to zoom all the way back, but there were more touches back here. So this was a really strong level of resistance, which eventually broke out on the 6th of September. And then price came back in almost 20 days later into this zone from above, into the same previous level of resistance, acted as support, and price popped up. Now, the reason I'm showing you the CHF JPY example is because this tends to be a more longer term break and retest type of currency. So with the next example I'm going to show you, you'll see how it's a lot more fast paced than CHF JPY. So weeks, months, days, however long after it's broken, the next touch of the zone that's broken will usually act as a really, really strong level of support or resistance. So like you can see, this was a strong level of resistance which broke on the 6th. On the 22nd, price finally comes back into this zone from above, touches it and shoots off higher. Okay, so a similar type of example. Again, it's not as long term, but we can see here. So we've had this level of resistance, which breaks on the 28th, and then 4 or 5 days later, it's back in this zone from above. We have a nice reaction and price pops higher. Now, if we have a look at Euro CHF, we can see how it shares the same principles of the break and retest. However, it's a lot quicker pace, and you'll find this with quite a few of the currency pairs. Again, we won't go through them all, but Euro CHF is a good example of these really quick break and retests. So what we can see is it retests within an hour or 2 hours of breaking. So if we have a look at this example here, price has established a strong level of support, which we've had all of these touches into. Price then cleanly breaks on the 21st of September. 1 hour candlestick is forced all the way down. It then bounces all the way back up within the next hour and then is forced all the way back down again. Okay, so it's broken the previous level of support. Price then shoots back up from the opposite side. This time it acts as a ceiling because it's above, and then the next hour candlestick's forced down. So instead of being days, weeks, months away until it finally comes back into the zone like CHF JPY, with Euro CHF, it tends to be within an hour, within a couple of hours. So you can get quick entries on this particular strategy. So price breaks, wait for it to come back up. When it does and shows signs it's reversing, you can enter back in and catch the next leg down. Same again here. Price is back above, it breaks through this zone once again, pops back up within 2 hours, and then acts as a ceiling, and then it's forced back down. Same again here. We break through this level of support, price breaks through, it pops back up within 2 hours, it gets forced down. And finally here, finally breaks this support once again on this candlestick here, price breaks, touches it within say 3-4 hours, price is forced back down again. So as you can see, the pace of the break and retest on Euro CHF is a lot quicker pace than the likes of CHF JPY. So again, note this down in your notebook. So when these type of zones do break on Euro CHF or another currency pair that you may have monitored in the future, you'll know that actually now it's been broken, you need to be on high alert within an hour, within 2 hours to take the trade when it comes back up from the opposite side, ready to take the opposite side of the trade. Whereas on something like CHF JPY, once the zone breaks, you can quite easily go away, whether it's a day, 2 days, 3 days, and just know that it's unusual for price to come back to that zone from the opposite side soon after breaking. It might take a few days, it might take a few weeks. So it gives you time to sort of move on to something else, spot more opportunities, and just be aware that at some point in the near future, price will be coming back to that zone ready to take a trade. And that is pretty much it for this evening. I hope all of that made sense and it wasn't information overload. I hope you're all taking notes as well for everything we've just gone through. What I'd suggest for those of you who use TradingView to practice and back test your strategies and just sort of have a play around and see how certain currencies move with, you know, your different types of analysis, definitely keep track of, what, like I said earlier, a personality sheet for your currencies. So you note down how quick they are, whether they're quick, whether they're slow, whether they like trend lines, whether they don't like trend lines, whether they react to the 200 EMA straight away or whether they break through, and just create this checklist of traits. And then every time you go to take a trade, have a look at that sheet and see if it's kind of agreeing or disagreeing with your analysis. And that's kind of like the cherry on top, along with a few other little bits and bobs, which I think I covered on a few Zooms ago. But again, we can cover that at a later date too. And then that's pretty much everything. You know, there's millions of different strategies out there. You don't need to know them all. You just need to find one that suits you best and works for you. And if it works and you're consistent with it, don't bother changing it. Don't bother looking for something new, because, you know, if it's not broken, don't change it. You can fine tune it. You can tweak little bits and bobs to get a better entry, or, you know, hold your trades a little bit longer for more profit, or, you know, certain little things like that. But above all, find something that works for you, stick with it, tweak it, and you won't go far wrong. Does anyone have any questions at all about anything we've gone through, or did it all make complete sense?
I have a question, Ben.
Sure, fire away.
So you know, like how these currency pairs react to the 200 EMA?
Yes.
Sorry, my kids just walked into the
It's
room.
all right.
Right, go. I'm on a meeting. I'm on a meeting. Sorry about that.
It's okay.
So does it react the same way on a 4-hour timeline or a 1-day timeline, or is it different for different timelines?
Yeah, I mean, generally speaking, the 200 EMA price will react to the 200 EMA, regardless of whether it's on a 15-minute time frame, daily time frame, 4-hour time frame. Again, certain currencies will react slightly different depending on the time frame. So again, this is something you can note down and add to that check sheet of, you know, USD JPY reacts really nice on the daily time frame, whereas something else might not react at all on the daily time frame and crash straight through. So yeah, these are little things that you can start noting down time frame wise, as opposed to just, does it react, doesn't it react? Because actually there was a trade we took the other day based on the 200 moving average and something else, and on the hourly time frame it didn't quite respect the 200 moving average as well as it did on the 4-hour time frame. And that was something that we didn't cross-reference and double-check at the time. So yeah, you're right. Different timeframes will react differently to the 200 moving average. Does anyone else have any questions they'd like to ask? Or is that pretty much it for this evening? No? Well, I hope it made sense. What I'll do is this is recorded anyway, so I'm going to pop it in the education section. If you want to rewatch it, or you have any questions about anything we've gone through, anytime you want to message me, it's not a problem at all. Let me know and I can help you with that. If you do need a one-to-one, you like to run through something specific that can't necessarily be answered in the DMs, then let me know. We can jump on Zoom anytime one-to-one and run through a few bits and bobs. But thanks for joining me tonight. I really appreciate you taking the time coming on and being serious about learning this, as it will pay dividends in the future. I know sometimes it's frustrating and it might seem like you can't see how you're going to progress forward, but if you're constantly learning, you're constantly looking back on your results and seeing what's gone wrong, what's gone well, and tweaking and improving each week, it's hard to fail when you're constantly improving and learning. So anyway, on that note, let's have a good rest of the week. Let me know if you have any questions, and I'll see you all later this evening or tomorrow morning. Cheers, guys. Have a great evening.
Um,
Yeah.
Bye.